So, welcome back. This is episode 5 of TNA Talks. I'm Barry O'Brien from Tech Nordic Advocates, and I'd like to welcome today Tamara Gehring from the Capital Markets team at the London Stock Exchange. Good afternoon, Tamara.
Yes, hi Barry. Thank you very much for having me. Excited to be here.
Yeah, you're very welcome. So, let's dive into your background. As I've already mentioned that you're at the London Stock Exchange. How long have you been with the company?
That's right. Yeah. So I started just shy of 2 years ago. Prior to that, I co-founded an advisory business, and that's after I'd spent 5 years working for Goldman Sachs, both in London and the US.
Okay. And London Stock Exchange, obviously extremely well known, but to our audience that generally used to dealing with VCs and angel investors in the startup world. Tell us a bit about the company and your role there.
Yeah, absolutely. So as you said, London Stock Exchange, really well-known brand. London Stock Exchange now is actually a very large group. It's much more than just a simple stock exchange. We're actually even a big tech innovator and provider. We are a big data provider, for example, through FTSE Russell, who provides, for example, the very famous FTSE 100 index. We also own LCH, the clearinghouse. It's one of the largest in the world. Last year, we cleared 1.2 quadrillion in swaps. So I sit in the sort of capital markets team and the bread and butter in the listing business of the group.
Okay. Interesting. So what was that number again? Run that one. That's one.
Yeah, indeed. 1.2 quadrillion dollars.
Quadrillion dollars.
Yeah.
Unbelievable. And that's in the swaps equity market.
In the clearing business. So swaps clearing, all sorts of clearing. Yeah.
Okay. So obviously this this interview and the TNA talks are all kind of geared towards helping Nordic startups and the Danish community in particular. How do you what kind of help do you provide to Danish tech companies?
Yeah, absolutely. So my role is the coverage of Western Europe and the Nordics in the capital markets team, and I advise companies wishing to go public in London and connect and promote the ecosystem of companies and investors. And really, we open up routes to raise capital. So once you're on the public market, obviously you've opened up yourself a nice route to capital. First to the IPO where you can raise capital, and then you have a route to follow-on fundings and to tap into a really supportive institutional investor base on the public market.
Okay, and as a company, then why should we go public rather than just keep taking on more VC money?
It's a really good question. Yeah. So obviously, like I mentioned, it is a good route to raise capital, and you will tap into a really supportive, committed investor base. And basically, you have this flexibility then. It enables you to raise very large sums of money to expand your business in a flexible way. For example, earlier this year, when the pandemic started, some of markets, the perception was markets are closed, but really on the public markets, we saw lots of transactions of companies that needed to bolster their balance sheet. For example, even restaurant groups that were really not doing so well in the especially early start of the pandemic. And they were able to find the support from the investors. And then also listing on a very well-known public market raises your company profile instantaneously. So there's lots of marketing and press that you will get around publicly listing, just really just unparalleled, propelling forwards of your brand. And then thirdly, I would like to mention really just the liquidity and sort of having public shares in your company and what that can do for you. Mm-hmm. So that really means you can, for example, use them in employee reward schemes, which can be really beneficial because all of a sudden these employees have something very liquid that they can trade for cash pretty immediately, which is very good. Mm-hmm. You can also use shares to do M&A. So London shares are a leading currency actually to global M&A.
Okay, interesting. And obviously we have various size companies in our network. What sort of size does a company need to be in order to to consider listing on the London Stock Exchange?
Yeah, so that's a frequent question I get, and lots of worry that you have to be a very large company before you can even contemplate going public. And so
that'd be my
actually,
impression. You got to be a big scale up or massive corporate or something like that, but not
yeah,
necessarily true, eh?
at least several hundred millions, etc. Yeah, that's the perception. Yeah, definitely not as big as you therefore probably thought. So in London, there are different types of markets. We start maybe by explaining this. We have the main market, the AIM market, and the high growth segments. Where you list is usually driven by size, as well as the sort of company stage that you're in. But technically, on the AIM market, there's actually no minimum size before you can list, and on the main market, it's only £700,000.
So of annual revenue needs to be £700,000.
Your valuation.
Oh, the valuation. Okay.
Yeah.
Oh, interesting.
So, usually that's calculated on multiples of EBITDA, and depending on which sector you're in. I mean, there's some sectors, 5 times EBITDA is your valuation, and others, you've seen, especially tech companies,
Yeah, 10x.
10x, 20x.
Tell me a little bit more about these different types of markets then, please. So you say there's larger ones and smaller markets that companies of any size can go on to, as long as their valuation's around £700,000, right? Is that pounds? Yeah.
Yeah, so that would be pounds. Yeah, £700,000 limit is for the main market. For the AIM, there is no minimum. Yeah, absolutely. So first of all, in terms of valuation, probably you are typically worth between 5 to 200 million or so on the AIM market to list there. On the main market, typically from 200 million upwards. And really to touch on the key differences of these markets. So the AIM is the alternative investment market, and that's normally for younger, fast-growing companies. And the market is exchange regulated, and that means that your admission document that you will submit is actually assessed by one of my colleagues, rather than for the main market, you go through the official regulator. And that is not to say that we don't work, with them to assess to put the regulations in place, but
yeah, sure.
Flexibility. There's also no free float requirement on the AIM market, which is important if you're a founder, and especially if your company is still smaller. You would obviously want to benefit from the growth, and therefore you would probably want to give away less of your company at this earlier stage, where the free float requirement on the main market is 25%.
Okay, and what kind of investors, are open to putting, their money into these companies? Tell us a bit about the actual investor side of things.
Yeah, absolutely. So London is really international. The investor type, you'll find all the top funds, all the top investors, be that from money managers, VCs, PEs, hedge funds, they're all present. Over 50% of the investor base in London is international. And importantly, also 30% is actually North American. So you can still tap your US investors while you benefit, obviously, from the good jurisdiction in London, the time zone in London. You can still tap into all these investors that you are targeting.
Okay. And do you kind of just leave companies to get on with it once they're registered, or do you provide sort of ongoing support and advice and things like that? What kind of things do you guys do for companies that list?
Yeah, no, great question. No, we like to stay close and support and help where we can. So we have our issue services team that takes on a lot of these things. For example, we offer a company profile alongside your share information, which the company can update and feed in, for example, link their social media feeds to make it very personal to the company. We also organize lots of events, so you can network with your investors and other companies in the ecosystem.
Oh, right. Okay, that's interesting. So there's a lot of like branding credibility, obviously, for being associated with the LSE.
Absolutely, yeah. It's not only the deep capital pools, it's also just the ecosystem which we're trying to bring together. I think that's very important.
Mm-hmm. Okay. And what about the Nordics in general? I mean, obviously this is aimed at the Nordic startup scene. Have there been any sort of Danish or large other Nordic countries success stories that that have joined on the London Stock Exchange?
Yeah, it's some fantastic success stories, actually. So one of the most famous is actually Just Eat, a Danish company founded
Okay.
in 2001,
Right.
Denmark by 5 Danish founders. And of course, in 2005, Bo Benson bought out most of the founders and actually moved the company to the UK. And listed the company in 2014 on a high growth segment at a fantastic valuation of 2.5 billion. And since then, really, the company has gone from strength to strength, doing lots of the aforementioned follow-on rounds to fund their international expansion and acquisitions. Obviously, we had the merger with Takeaway.com earlier this year, and now with Grubhub. And yeah, the company is now worth 13 billion, so more than 5 times of
Wow.
the original listing. They've also moved to the premium segment. They are now part of the FTSE 100 index, which in a world of passive investing is really important.
Mm-hmm.
Yeah, so it's a great main market example. We also have, an AIM market example is, for example, Faron Pharma, a Finnish company, Finnish biotech company.
Okay.
That is developing drugs against cancer. And they're listed in 2015. They, at a valuation of 91 million, and they floated around 16% of their company, and have since grown to double that size.
I think that's an interesting point you made there about the percentages, because I think another thing a lot of people think is that you've got to put the whole, all of the stock, up for grabs, right? But you can choose. I mean, is there a minimum? I'm assuming, though. Is there? I mean, there's got to be
the free float requirement. This is exactly that's what I said, where it depends on which market you're on. On the AIM market as such, there is no minimum requirement. We run a test, though. We look at the various criteria because we need to ensure that there's enough liquidity in the stock. So again, the average free float for an AIM company is around 10%.
Right.
On the main market, the minimum is 25%. But yeah, absolutely. You don't have to list all of your stock. You will not lose your company. You will not lose control over your company only because you go public.
Yeah. Interesting. Okay. And what about sort of COVID times? How's that affected the capital markets?
Yeah, of course, tumultuous year. We saw the share prices drop in March, but no, it's been actually very good. So in the beginning of the pandemic, again, so this very commercial and flexible regulator stepped out and brought out a new temporary rule that made it slightly easier to raise capital, and a lot of the cash-strapped businesses on the public markets actually went on and raised follow-on funding to bolster the balance sheets. So lots of activity there. Slightly quieter on the IPO front in the beginning of the year, but that has really come back with a vengeance. We'd had 28 IPOs so far this year, raising over $10 billion. And yeah, in total, we had actually 640 IPO and follow-on transactions, raising over 41 billion. That's nearly 3 times as much actually as on the next European exchange. So it's the market is working really, really well. Showed its mettle in times of need to the company.
Is there? I mean, you mentioned the restaurant. Some companies that have restaurant chains and things like that. Has there been a particular sort of trend of companies that have done it this year? I mean, is there any particular sectors that you see more than others? Health tech, for instance? Or?
To be honest, I mean, across the board, very successful fundraisers. What we have seen, of course, is tech companies and healthcare companies are definitely more popular with investors, and that trend is expected to prevail. But just to show that public markets really work as a support mechanism, and that you have long-term institutional investors that really do support you, even when the restaurant chains are clearly running a business that is currently not as popular, but even then you will still be able to raise capital.
Yeah, that's a good reassurance. So, just to kind of wrap up, like, how do you see things? Look into your crystal ball. How do you see things next year, 2021? I mean, what's the sort of trends that you're reading about at the moment?
So from our perspective, the pipeline is definitely full. I think 2021 will be really quite busy in terms of IPO activity. I think even looking at all the different macro headwinds that are currently around us, that will not stop this. And the investors are definitely hungry to see great equity stories coming to the market. Yeah.
Fantastic. Very interesting. I learnt some new things there. There's some terminology there that is new to me, so I might have to go and Google a few things. But it's fascinating. Thank you ever so much, and I hope it's a really good insight to the people that are viewing this video, and just understanding that there are different alternatives out there for as you say, for raising capital. It doesn't always have to be the standard path. I think. As we've discussed, on here and previously, I think the capital markets, I think, are certainly an area that a lot of people don't know about, don't understand as well, perhaps. And I think it's good to share the information in a clear way. So thank you ever so much for your time. It's been really interesting, and we'll hopefully get you back next year with some more positive news.
Oh, fantastic. Yeah, thank you so much for having me. If there are any questions from anyone, feel free to get in touch.
Yeah, for sure. I'll put a link to your website. I won't put your personal email address in the notes of the video, but I'll put a link to the website, and we can send some people your way.
Fantastic. Thank you, Barry.
Thanks ever so much.
See you
Cheers.
soon.
Bye.
Bye-bye.